Meta just beat, and they are up 7.5% after hours. Mo, tell us what their EPS expectations were and what they actually reported.
So their earnings per share expectation was $2.91 a share. They came in at $2.98 a share.
Okay.
Revenue, $31.08 billion, came in at $32 billion.
So they beat pretty handily on both metrics. This is a company that on November 4th of 2022, a mere 9 months ago, this company was left for dead. This company, everybody said Zuckerberg's an idiot. And guys, I want to repeat till I'm blue in the face. News follows the stock price, not the other way around. This is $88 a share on November 4th, 2022. It is now, Mo, let's go after hours here.
It's up 6.5% now.
Oh, so it's fallen back a little bit.
Oh, now 5.5%.
Uh-oh. Are they guiding?
Right.
All right, so the stock has been up and down. July 19th, which was last week, it hit 318.68. It's now at 315 on the nose. Guys, if you're new to our channel, we love doing these earnings reactions, but I want to repeat, and I will repeat till I'm blue in the face. You should not make any investment decisions based on missing, beating any of these expectations. It is not possible for a company to continually, consistently beat the earnings expectations. If they are, they're probably manipulating in some way. But if the thesis is still correct, back when Meta was at $88, $100 a share, go watch our videos, and we said our thesis has not changed. We still believe that a company that has 3.5 billion people using their services and a lot of potential in revenue growth has a lot of potential. The average revenue per user in the US was like $40 per user. Internationally, it was like $5. We sat there and said, listen, both metrics, both areas have a lot of growth potential for advertising. So, again, the goal now is to decide, is $315 a reasonable price to pay for Meta? Is it reasonable? So this video, we have something for beginners and we have something for more advanced users. We're going to go through the actual earnings press release. We're going to do our 8 pillars. We're going to do analyst estimates, and we're going to finish it all off with our stock analyzer tool. The tool in our software that's been used over 2 million times since we started it to give us a price to pay for the company, not including the balance sheet. Mo?
Some highlights.
Would you please do some highlights from the earnings release? Can you make that? Is there a way? Oh, no, because I can't. You're fine. You're fine. Go ahead.
So revenue came in 11% higher than the same quarter ending last year. Costs, 10% higher.
Okay.
Income from operations, 12% higher. Operating margin stayed the same. So that was good. Now we get down to some numbers here. Family daily active people, 3.07 billion, increase of 7% from the year prior. That's pretty big.
Guys, 7% growth for a company and that everybody was saying just 9 months ago is dead.
And here's Facebook daily active users, 2.06 billion, an increase of 5% year over year.
Guys, it's a huge company. They have everybody. I mean, there's 7.5 billion people in this world. They have WhatsApp, they have Instagram, they have Facebook, they have Oculus, they have all these things. It is not possible for them to grow 10, 15% on their user growth every single year. It's just not going to happen. But what they can do is they can maximize more and more dollars as the world becomes more and more online. Right, Mo?
Yeah.
Okay. Now some guidance. CFO outlook commentary.
We expect third quarter 2023 total revenue to be in the range of 32 to 34.5 billion. Let's see here.
And then, so the third quarter last year, let's see what they did. Third quarter last year, they did $27.71 billion in revenue.
Okay.
Do you see how much of that is like a 12% increase? What kind of increase is that in revenue? That's huge.
Full year total expenses will be in the range of 88 to 91 billion, an increase from our prior range of 86 to 90 billion.
And the current
due to legal related expenses.
So where's total expenses here? 62.42. Is that operating expenses? Was that what it was?
This is total expenses.
Okay. Got it. All right, go ahead.
Let's see. I'm trying to see if there's any more big guidance here. We anticipate payroll expenses. Yeah, for Reality Labs, we expect operating losses to increase meaningfully year over year due to our ongoing product development, which is really no surprise. They've said that they're going to lose.
The Meta, right?
Yeah. What did they say, 10 billion a year?
Yeah. And guys, guess what? For those of you who sit there and say Meta's going to be a flop, then it's a flop. And guess what? They add $10 billion a year back to the bottom line.
Yeah. So speaking of this Quest, this Meta Quest, Roblox is coming to the Meta Quest. Roblox is big amongst the younger kids. I don't know, 13 and under. I don't know really what it is. It looks like some robotic game. Meta Threads. Are you on Threads?
Okay.
Do you thread, bro?
I signed up for Threads, and I never signed back in. Did you see the average users on Threads?
It says they've reached 100 million users.
Yeah, but how about active?
No.
Oh, it's plummeting.
Really?
Plummeting. It is. Guys.
It's the shiny new toy. I don't know.
But it's not even shiny.
Oh,
it's not like TikTok.
I don't have it.
The problem is I can't delete it now because then you lose your Instagram.
Oh.
So that's what they did. They sat there and said, okay, you sign up for Threads, but you can't delete Threads because then you lose Instagram.
Smart.
Yeah.
Wow. Okay.
I don't know what let's see. Let's see what people are saying about Meta right now on the Twitterverse. Keep going, Mo.
I wanted to go over, oh my gosh, look at that. Now it's only up 2.5%. So we've swung from this being up 8% to 2.5%. Wow. I want to go over some bull and bear cases.
All right, let's do it.
So bull cases, this is pretty impressive. They own 5 out of the top 7 most downloaded apps in 2023. How the hell is that a dead... For anybody that said that, and you people out there that were criticizing us when it was $90.
Yeah. F off.
Screw you. Yeah. Seriously. Now that it's $310 or whatever it is, screw you.
I told him he was in a bad mood today. He said he wasn't.
Yes, he was.
100% he was. 100%.
I didn't even know I was in a bad mood until I just saw this.
100%. I knew he was in a bad
5 out of
mood.
7 and 3... I almost swore. Half of the globe using their products and you say they're a dead company. Screw you. All right. I don't even remember where I was.
So
Meta
guys,
has begun to monetize WhatsApp, which is fantastic.
Let's go.
Come unhinged now.
It's so amazing. We were in the gym. We were in the gym. I'm like, so Mo, why are you in a bad mood today? I'm not in a bad mood. I'm like,
I was in a bad mood.
I said it before you came in. I said Mo just normally smiles and nods. Now he's just calling everybody idiots. It's like maybe
calling everybody idiots.
Everything rubbed off that Paul's ever taught him is like coming to a culmination.
I'm derailing
right now.
So, but to Mo's point, and this is what we want to discuss, guys. You're never going to buy a stock at the bottom, and you're really going to sell. You're not going to sell at the top. Sometimes things are not popular. In the short run, stocks are a voting machine. In the long run, they're a weighing machine. Our thesis as Meta went lower and lower was nothing's changed in the company. They still have revenue growth. They still have revenue growth potential. They still have a high return on invested capital, which means they can reinvest their amazing cash flow back into the business. And guess what? They have very, very little debt. Look at this, Mo. They literally have, if you go to their 8 pillars here,
what's that?
It's 1.42. Okay. It's so freaking low. So I look at this and I don't blame Mo for getting upset because people come on this and say, oh, you don't get this. It's like, okay, fine, then don't buy the stock. But all I'm telling you is like, don't believe the perception out there all the time. We're not going to be right all the time. Absolutely not. But when we look at a company, we sit there and say, is this just perception or just reality?
Yeah. Look at this.
Good lesson learned.
Look at this. Monthly active users in WhatsApp, WeChat. I mean, we hear about WeChat. We hear about Telegram and how great it is. Look at the domination from WhatsApp. And they haven't even begun to monetize WhatsApp yet. Zero.
So in the top 3, they have 2 of them.
Yeah.
WeChat's very big in China. Right. Where's Telegram big?
I have no idea. Conspiracy theorists? I think that's really what it is.
Is it?
Yeah. Isn't that right, Nick?
And Snapchat, as we were discussing.
Scam artists that email. Okay.
So I would say Snapchat is just reserved for single people who want to send nudes to each other, as we were talking about with Dalton earlier.
Yeah.
So
that's really what it is.
We joked and said that we wanted to do a prank call on the on Snapchat's investor relations and ask them if they can tell us how many nude photos were sent month by month, because that's how we'll really see the growth in Snapchat. So guys, here's our 8 pillars on Facebook. Remember, if you have our software, you can customize these up to 12 pillars and like 4 quadrillion different versions. But Mo, look at this. Basically, it's an X for 5-year price to earnings ratio and an X for 5-year price to free cash flow. Yeah. Guys, keep in mind, at one point in the last 9 months, this was single digits essentially.
Yep.
This was single digits. And people said the company was dead, and now everybody loves it because we have no idea. Yeah. But high return on invested capital, 16%, which means they're able to invest money back in their business and get high rates of return. This allows a company, if they were to invest $1 billion in the business and get this return, that means they would increase their profitability by $160 million by reinvesting that as a permanent level. That's awesome. They bought back shares, which we're kind of apprehensive about because even though they were very cheap, and by the way, they announced even more share buybacks in their low 100s, which I loved.
Yeah, that was good.
We want to make sure they're buying back cheap shares. Revenue growth, free cash flow growth, and profit growth, everything's great here. The question is, are these multiples of 32 and 30 on the PE and price of free cash flow too much money? Mo, do you have anything else to talk about in their earnings release, press release?
So they've repurchased $793 million worth of Class A shares in the second quarter. As of June 30th, 2023, we had $40.91 billion available and authorized for repurchases. So I really hope they don't repurchase at this point in time, but all right, stock analyzer?
Let's go to analyst estimates.
Expectations, yeah.
Yeah, analyst estimates.
$1 billion.
So analysts expect them to make $12 per share this year. So if they'd stayed at $88 a share, it'd be 7 times earnings.
Yeah.
And expected to go about 50% in the next 4 years, 10 to 12% a year. Okay, not bad. This is random drop right here.
It really is.
That's really weird. Mo, can you look up the average revenue per user that they have as a company? Because I want to sit there and compare that year over year.
Sure.
And then revenue growth, mid to high single digits, 130 billion to 178. So much for being a dying company. Incredible, isn't it, Mo?
It really is.
They're currently up 4.1% after hours, 311. Their all-time high was what? 384, September 1st, 2021. So from September 1st, 2021 to November 4th, 2022, they dropped almost 80%.
So this is the number.
That's 14 months.
This is the number through February of 2023. The data is through 2022.
So the average revenue per user is $40. So I think I was wrong. I think it's 50 in the US and 5 internationally or something like that.
Actually,
40 overall.
Let's see.
Here we go.
There you go.
58.77 in the US, Europe at 17.29, Asia 461, and the rest of the world 50. Guys, what are the fastest growing parts of the world in terms of technology? Asia and Africa, India. Come on. Well, India is in Asia. So there's so much more potential revenue wise. Guys, if you're like me, you're hoping we have a bear market and it hurts tech bad and the story changes again and hope maybe Zuckerberg will have that fight with Elon Musk. They'll wrestle and Zuckerberg will break his finger or something like that. I'm not wishing it upon him, but then the world will overreact and sell off the shares. Good God. The company is up year to date 140%, Mo.
That sounds normal.
88% over the last year.
That also sounds normal.
Wow. All right, now for our stock analyzer tool.
Yeah.
Guys, like I said, this piece of our software, we have a lot of tools up here.
Including you.
We have the retirement calculator, the stock analyzer tool, 8-pillar search, 8-pillar portfolio. We can put all your stocks in the portfolio and see how they look as a group. The real estate calculator and the pillar screener. The great thing about the real estate calculator is it is grandfathered in. If you sign up now for our software, which you can do at everythingmoney.com, you will get the real estate calculator for the rest of your membership included, because this is going to be split off very soon. You get all of these plus our community of thousands of people, which I guarantee these 2 messages here have to do with Meta. Everythingmoney.com, we're running a special right now. Typical price is $39 a month. Until the end of the month, it is $29 per month. Go sign up. You get all these tools, 10,000 stocks, all these tools on your phone, ready to go. This is a no-brainer, less than $1 a day. It's going to change the way in which you look at money and handle it. Mo, let's do our stock analyzer tool. Why are you pointing? Guys, I just found out that Chipotle is down 8% after hours. We're going to do a Twitter exclusive video. You need to follow us. Oracles of EM, that's our Twitter handle while we work on getting the other one. That is our Twitter handle. We're going to release it right there, and I'm going to retweet it as well. But Oracles of EM is our Twitter account. Please follow us. We just recently started getting active with it. We're going to do a Chipotle Mexican grill video after this video. Let's get back to the stock analyzer tool.
Before we do this, I have a prediction.
Okay.
We open the day negative on Meta tomorrow.
That's your prediction?
That's my prediction.
Well, that's a big one.
This is because we've seen the crazy. I mean, we saw it. Didn't Microsoft? Weren't they up after hours and they opened down and had a down day?
Well, I think, but they finished after hours in the negative.
Oh, they did. Okay.
Yes.
This is very volatile right now. That's what I think is going to happen tomorrow.
Okay.
Negative tomorrow.
Mo,
All right.
We're going to do a 10-year analysis, guys. You can do 1 to 20. Give me first line right here, revenue growth numbers. In the last 10 years, they did 33% revenue growth. The last 5 years, 18.8%. Last year, they lost 1.9.
I'm going to say 6, 10, and 14.
6, 10, and 14. Big number right there, guys.
I'm saying the metaverse crushes it.
Yep. And 6% is just the world grows and they grow along with it. Profit margin, Mo.
24.
Okay.
28 and 32.
I love it. Free cash flow margin.
Same number.
Yep. So guys, before we go further, I want to explain this. So this is part of the art of the stock analyzer tool. You want to make low assumptions, middle assumptions, and high assumptions. You want to look here for guidance, but you also want to think about the company going forward. If it was Meta's grown so much in the last 10 years, the likelihood of seeing this is very, very low. Very low. 33% growth is basically doubling 4 times essentially, which would be 16 times revenue from what they have today, which would be like almost $2 trillion.
Yeah.
Not going to happen. Not going to happen. But 14% growth, which is still a lot.
That's a lot.
14% growth over 10 years still takes their revenue. What's their revenue current in the last 12 months?
117 and a half.
Still takes their revenue to $430 billion in the next 10 years. If they crush it all the way around, that could happen. These profit margins tend to be more consistent. But we went higher in case, as they get higher and higher, more and more revenue, their gross margin is very, very high, which means every extra dollar they sell of services, very high part of that goes to the bottom line.
Right.
All right, PE, Mo. The current PE is 36 and 44, but of course, we're not going to pay attention to current. We're going to start at 15 and go from there.
So I'm going to go 16, 18, and 20, but I could also go higher. I mean, this is a real
What about
note.
16, 19, and 22?
That's cool.
So guys, what I said about starting at 15, the market average is 15. However, the bigger the moat, the higher the return on invested capital, the more growth there is. And with such a high gross margin, you should be willing to pay more money for that. If this was a company that was declining 3% revenue a year, you might put 8 as a PE because you're like, listen, I got to ride this thing out until it's done, so I need to get my really high return on it. All right? So that's why we put 16, 19, and 22. We do think maybe this isn't bad. They are a very big company with a lot of growing potential revenue, and they control 3.5 billion users in this world out of the 8 billion people out there.
Right.
So finally, our desired annual return. What return do we want? You can get 9 or 10% from investing in a long-term ETF. Now, we've beaten this company up. The higher the return you want, the more margin of safety there is, right? So the more you pay for something, the less return. The less you pay for something, the more return. So if you want a high return, you're going to have to pay less for the company. So as we put higher return, it puts a lower price for the company in terms of relative to these growth rates and these assumptions. So as we make higher and higher assumptions, we need more margin of safety because we don't know that's going to happen. It's less likely to happen, so I need more return to make that bet. So Mo, give me the return stuff.
I put in 10, 12, and 14%.
I still like that, except I'm going to do one thing different.
Sure.
10, 12 and a half, and 15.
Okay.
Because I still think revenue growth of 10 is really difficult.
Okay.
And I think 14 is going to be really, really hard.
All right.
So guys, stick with me. I'm going to hit the analyze button. A bunch of numbers going to pop out. Stay with me through the end of the video. Because don't forget, we're going to show you where to get this video on Twitter. We're going to hit the analyze button. I'm going to explain these numbers very thoroughly. Hit the analyze button. Boom. Oh my God. Remember when this was low price of 200, high price of 416, middle price of 295? If you buy today's price at 311 and the low numbers occur, you're going to make about 4.8%. If you buy at today's price and the middle assumptions occur, you're going to make 12.3. You buy at today's price, the high assumptions occur, you're going to make almost 20%. So for me, I'm probably adding it to my watch list. This is going to be ironic. Ready? The same price I said a year and a half ago, 250.
I just changed mine to 250.
I just added it by putting this check mark on our software. Now I'm going to be notified via email, via our software, and on my phone. Guys, you know how much the market's been up lately? When was the last time you got a notification that the stock price hit your metric?
None.
All last year, it was like every day.
Every day.
Guys, I loved it back then. So guys, thanks very much. Tim, It's Chipotle Mexican Grill is coming on Twitter. Follow our Twitter account again. Guys, Oracles of EM, follow us, and we will put it out there in the next half hour or so. Take care.